Hello, I'm Liz Lumley of Finextra, and today I'm speaking to Paul Thomalla and Lou Zurawski, both of ACI, and we're going to talk about digital technologies and the changes in the FinTech space. Now, Paul, there's a lot of hype going on right at the moment about this revolution in digital technology and changes in customer behavior. But the answer I want from you, the question I'm giving to you is, where is it beyond the hype? How are banks really responding to this new digital environment?
Well, I think there's kind of two levels to that. There's one is there certainly is a lot of column inches and there's a lot of hype going on in the industry. But on the other hand, I think it's a fundamental crossroads of actually what does a bank mean as we move forward? What's it there for? How's it going to look after its customers? What's its real purpose? So I think from that point of view, we are at a huge crossroads.
Mm-hmm. I mean, I'm just thinking of what's going on in the UK with Lloyds, for example. They made the press with closing down all the branches and investing all this into digital. So I'm thinking, is this a lot more than just having some sort of cool digital team in an office with beanbags, or what are some of the real sort of infrastructure changes that banks need to have?
Well, we saw, Lloyds put in £1 billion to take the bank digital. We also saw Nordea write off 340 million euros trying to get down that route. So they're trying to do a lot of fundamental work, but actually it's kind of juxtaposed between the more exciting digital things and try and put the customer right in the middle, and actually this poor old plumbing that they've got and they just kind of need to fix.
They need to sort of rip that out and create a more agile environment.
Exactly. And so, there is a lot of issues with actually just trying to, I've got my bright ideas, I know what I want to do, but how do I actually go back to the shop and say, here's, how do I do this? And that's what we spend a lot of time and energy trying to work out how to fix that so that banks can go back and make it more agile so that they can take on this digital opportunity.
So, I mean, Paul talked a little bit about banks responding to the digital age, but I'm just wondering whether in the payments world this presents a kind of innovator's dilemma. What do you think, Lou?
Yeah, the classic innovator's dilemma is where industries keep on responding to customer demands, and they incrementally improve their product, and they're doing all the right things, and yet they forget that the whole industry is changing around them. And this dilemma was written up by Clayton Christensen in his book in the late 90s, and he talked about how entire industries have done the right thing. Kodak is a classic example, or the film industry is a good example.
Yeah, but how can you compare banks to sort of the film industry? Or I've heard, people compare banks to bookstores and stuff. I mean, banks are a highly regulated industry. How can you compare it then? Well,
I think there's a subtle difference between the way in which banking works and the way in which the film industry works. The film industry is very, very quick, very dynamic, and actually bang, bang, bang. It's, if they didn't innovate, they died. Banking clearly has got slightly more leeway in the sense that we can't sort of play hard and fast with banking. So I think the innovators, well, the payments innovation dilemma is not quite as dramatic as people are making it up. I mean, there isn't just a need to go and innovate at all costs. There is a requirement to try and keep the stability, the reliability, the things that people take for granted in their banking system. That needs to be absolutely in place at the same time as finding some wiggle room for paying for innovative things which engage customers in a different way. So I think this payments innovation dilemma is real. Mm-hmm. It is not unsurmountable. And in fact, it's probably an imperative that banks use this dilemma to actually try and move forward.
So in terms of sort of influencing customer behavior, I mean, especially in London, I bet the cards industry has sort of Transport for London to thank for sort of making contactless more acceptable to the public, don't you think? I
think it's a really good viewpoint, that in the sense that it's taken for granted that people go through London, they waggle their hands by a card reader. There's no reason why that should have been taken for granted 10 years ago. It was quite a big change to go from paper tickets to suddenly waving your hand over something. And here we are now where the NFC cards are being adopted worldwide. I even listened to President Obama doing a speech about it a couple of weeks ago. So,
yes, EMV coming to the US.
EMV is finally coming here, yeah, exactly. But it shouldn't have been taken for granted. And yes, we do have, I'm not sure that the Americans have got TfL to thank for that, but certainly that's an example of a journey where people get used to behaving in a certain way. They wave their hands around. That becomes an easy thing to jump from there to using an NFC payment card. And actually it's quite an easy step from there to go to the next obvious form of innovation, where you use a mobile phone with embedded NFC. And that's why I think Apple Pay is going to be successful, as will other mobile schemes with an NFC embedded in it.
So Paul, I'm sorry to give you the big question, but I really want to know from you, we've talked a lot about digital, we talked about customer behavior, but what's really at stake for the industry?
So I think what's really at stake here is what's the value proposition of the bank. How does it look after you and me? How does it make money? What are the services it actually provides? And we're at a point when we see the retailers are making huge decisions and entering the market in a way they have never done before. And ACI has a lot of retailing customers. We understand that market well as the banking market.
There's a lot of people in this industry that I think are looking forward to this place where banks are just a place where people keep money, and a lot of the services are in the retail world.
I think that's absolutely right. And I think the question is, if you will, what happens if retailers win that argument and they become the retail payments people, if you will, and the banks just hold the money? And I think from a bank's point of view, to get agile, they really have to think that through. And we've seen with CACP in France, they've actually gone through that work, as many other banks have actually, and they've gone from 22 payment engines down to 1 so that they can become agile.
But I mean, despite the fact that you're mentioning a lot of these projects at banks, if you talk to people on the street, most of the consumer payments innovations are coming from, they'll mention Starbucks, they'll mention Tesco's, they'll mention TfL. It's not coming from the bank. So is it not surprising that banks aren't sort of winning this innovation war?
Well, I think it's pretty tough for the banks, to be fair. I mean, what we spend a lot of time and energy doing is, hey, how do you start to make these things agile? And we've got answers for a lot of that. But actually, they do need to be putting the customer right in the middle of this and working. What is the value proposition? If you're a retailer, that's what you do as standard. For a retail bank, at the moment there's a lot of plumbing to do, and the regulators and mandates. The
customer doesn't get a look in.
Well, I think it's hard because they're spending a lot of time and energy. 85% of their monies are just making do and mending and working out what the regulators need, rather than trying to get these new value propositions out into the marketplace.
Excellent. Okay, well, we can talk about this for a long time, but I'm going to have to end you there. But thank you, Paul. Thank you, Lou. Thank you very much.
Thank you.